Some companies have fintech in their DNA, even though they are not from the financial service industry. One of these companies is Wolt. The Finnish restaurant platforms enables customers to order food from their favorite restaurant and get it delivered directly to their home. Wolt is clearly not a fintech, yet it offers payment, wallet, and lending products to restaurant owners and customers. In this episode, I speak with Anniina Heinonen. Anniina is a managing director at Wolt Payments, where she's responsible for all regulated financial services that Wolt offers. We speak in detail about Wolt's different financial products, how PSD2 was an important catalyzer for their embedded finance strategy, and why she's not worried how much profit the company makes with its embedded lending products. My name is Lars Markull, and this is the Embedded Finance Review podcast. Every 2 weeks, I'm interviewing the builders and shapers of embedded finance. And a quick reminder from my side. At Embedded Finance Review, I publish weekly newsletters, bi-weekly podcasts, and host in-person and virtual industry events. You can find more about all these activities on our website, embeddedfinancereview.com. In addition, we also work with non-financial brands, infrastructure providers, and banks in understanding, designing, and launching their embedded finance products. If you are interested in working with us, visit our website and reach out. And now, let's dive in. Hi, Anniina. Welcome to the podcast. How are you doing today, and in what part of the world are you actually located right now?
We're doing great. I'm in Helsinki, and now we literally have the 2 best months ahead of us in a year. So sun is shining and summer is coming, so couldn't be happier.
Yeah, I know that we're feeling very well. Same over here in Berlin. We actually met a couple of weeks ago. I was now in Helsinki for the Nordic Fintech Summit. Me, of course, is my focus of embedded finance. I was going through the event app a couple of days before. I was like, oh, somebody from Wolt is there. That's exactly the kind of person I need to speak with. And I was glad we were able to catch up at the event, but that you also agreed on joining for the podcast to talk a little bit more about Wolt and what the company is doing in the world of embedded finance. And I guess most or maybe almost everybody of my listeners here in Europe mostly know what Wolt does as a platform for restaurants for food delivery. You are the managing director of Wolt Payments. Maybe can you describe a little bit more in detail what it exactly means? Like what is the setup between Wolt and Wolt Payments, and how is your role exactly defined?
Of course, thanks. Yeah, it was great to meet you, Lars, at the event. And thanks for having me here in the podcast. So Wolt established an in-house payment institution in 2021, and that was also the time when I joined. So both myself and our payment institution were soon celebrating our fourth anniversary. And the reason originally for having this in-house financial entity was PSD2 compliance. So basically how we handle our merchants' funds is considered as merchant acquiring. And back then, after careful considerations, the decision was to build these capabilities in-house, also for the strategic leverage. Now we are operational in way over 20 markets in Europe and beyond. We're fully owned by Wolt, and really the purpose is to provide regulated financial services to Wolt's end users, merchants, and courier partners. So an interesting combination of platform business and fintech capabilities, which I think originally has also been the purpose of PSD2.
Yeah, it's actually quite an interesting point. So, I mean, obviously with PSD2, with the introduction of PSD2, you just described it already. You had to figure out how you're going to hold customer funds, I guess. Maybe correct me if I'm wrong here, but before PSD2, it was probably just like a simple integration of a payment service provider where you receive the funds from the person who wants to pay for the meal. You keep it on your own accounts before sending it to the restaurant owner. But then, of course, with PSD2, that wasn't really allowed anymore. But then taking that to the next step, would you say then, like all of the things you're doing today and maybe in the next years, is that kind of like all based on PSD2 in a way or not? I mean, in a way, PSD2 was perhaps a little bit the driver to set off Wolt in the world of financial services and maybe payment specifically at that point of time?
Yeah, probably. I think Wolt has been essentially a fintech company from the get-go, because when we are arranging the delivery of goods from our merchant partners through the courier partners to the end users, at the same time, we are managing an opposite transaction flow with money and solving payments in the most customer-friendly and frictionless manner has always been one of the main targets. Cracking that in one market is relatively straightforward. You already referred to partners. But when you bring into that picture over 30 markets from Europe to Central Asia, the furthest in Japan, it's a whole another ball game, and the capabilities that are needed just to manage the incoming money side, just to manage the external partners is a handful. So I think kind of the financial services thinking has been there from very early days. PSD2 probably has accelerated certain things, but of course now with the capabilities that we have, we're eager to leverage them for further use cases and purposes.
That's quite interesting to hear that the fintech mindset was already like there from the very early days. I guess when nowadays, when we outsiders look at a company like Wolt, a little bit not obvious, but like it makes a lot of sense. But I guess that was like very different at the starting point.
Of course, and just to add on that, because I think it's in general with platform businesses, when you have multiple stakeholders, it always complicates the money handling parts.
Yeah.
So finance team capabilities, legal capabilities, all those kind of things that you need to think about from the area.
And we refer to the company as like Wolt Payments. Can you describe a little bit like what kind of products do you exactly, I mean, is it money acceptance then purely, or what is exactly, let's say, in your control or in your activities that you're doing?
Yeah, so from the payments point of view, we have divided the world in two. So we have the incoming money side, which is basically accepting end users' payments through our external PSP partners. And the kind of operations on that side are relatively different because we work in cooperation with partners. And then we have the rest, which is the payouts to merchants, payouts to couriers, and also everything that happens with money when we are responsible for it. So from my area of responsibility point of view, when money becomes regulated, when it becomes to someone else, when we are handling it from someone else's behalf, or when we are providing other type of regulated services, that's when our team comes to the picture. At the moment, the main regulated services, financial services that we provide are exactly the merchants acquiring parts. Then we already have kind of a seed of an eWallet in the app. So if anyone has ever used our gift cards and redeemed credits, the credits are actually e-money. And when we are storing them in the app, it's the storage is kind of an e-wallet. So that's a relatively new area. The lending product that we do together, the merchant Wolt Capital solution that we have in cooperation with Finnish, is probably the best example of, I would say, more strategic customer value adding services that we can now offer. And maybe it's also easier for people to relate because it's kind of lending products in general are in a way no-brainer in this setup.
Yeah, and I've obviously also covered the launch of like Wolt Capital, and we can maybe like focus on that in a little bit more in detail, how that all started. But it's quite interesting how you describe the payment journey. I would guess like, I mean, you said like the payment acceptance of customers is not really your area yet, only when the funds arrive in the regulated environment. I guess payment acceptance still is like really focused on local specialities in terms of having the right. It's not about like maybe reinventing the wheel, but rather having the payment method that are really important, supported. So customers who are obviously very hungry maybe, and they want to order their food, they're not being left out because of like a payment method is missing in that regard.
Yeah. So in that sense, we are acting like a merchant, providing their services globally on 32 markets. So we face the similar challenges as normal merchants would face. How to ensure that the payment experience is as frictionless as possible, so that the checkout dropout rates and checkout is as low as possible and the checkout is as fast as possible. And already in Europe, the challenge is that the behaviors are still very local. And even though we have global card schemes, of course, that's kind of a different case, but still a lot of local payment networks and payment behaviors, which then means that we have had to integrate with tens of service providers. And as I already mentioned, the operations are slightly different on that side of things, exactly because of the continuous optimization, continuous partnership management to ensure that we can ultimately then serve our end users the best possible manner. Whereas then on the regulated side, we might have more control over things, and we can probably think more about how do we resolve these things in the maximally scalable manner. So the dynamics are definitely different.
Sure. And then when we look in from the payment acceptance to the sort of on the regulated side, the payout, just out of curiosity, how does it work when you pay out? I mean, does it mean a restaurant or a rider gets a payout on their own cycle basically? Is it weekly, monthly, daily? Do you incentivize maybe also for some restaurants not to pay out immediately and kind of delay it for certain benefits, potentially even at one point even turning the wallet into more functionality?
So currently we are paying out in agreed cycles, and also it slightly depends on the merchants. Usually the smaller merchants want the money paid out as soon as possible. We pay out due to their existing bank accounts, whereas the bigger merchants might prefer than slower payout cycles. We feel and see the pressure towards more real-timeness. I think that's one of the mega trends in the payments field. So let's see what we can do on that front.
I see. And you also mentioned the wallet for the customers, I guess for us and customers who want to can buy gift cards to load up their balance. Is there any bigger thinking around there? Is it maybe just born out of, okay, I can send a gift card for somebody's birthday and that's it? Or was there let's say a bigger idea behind these kind of products and wallets?
Everything started with gift cards. So gift cards was considered as a great business case and good service for the customers. And then the eWallet followed suit because of the e-money regulation. So I think we are being opportunistic here because having already the product and now also the compliance in place. So we are operating as an EMI in all our European or EEA markets. Originally, being opportunistic, getting certain building blocks in place. Of course, we can recognize further use cases, probably even more convenient use cases for the e-wallet than just gift cards, but also gift cards as a standalone is a great and important service for our customers.
I can imagine, and maybe you don't have to answer that question, but obviously when looking at the option of having wallets for merchants, for restaurants, plus wallets for customers, there's obviously a lot of potential as well to turn this into a loyalty scheme as well, where you can put the things together, where you even save on transaction cost and basically do internal transfers. But I guess this is all maybe that you're currently thinking about, and let's see what comes there.
Yeah. So I can't really comment too much on our future plans, but from a generic point of view. So if we think about our current payment flow, paying a burger, getting the money from the end user to the merchants and couriers involve 10 different stakeholders at minimum, out of which 6 are financial institutions, banks or PSPs or others. And it doesn't need to be said out loud that it's not the most efficient setup that you can imagine. So, of course, we are really interested in simplifying that flow and make it more efficient, both in terms of time and cost. And now with the licenses and the capabilities that we have in-house, we have better opportunities to kind of streamline that part of the process of it.
Interesting. Maybe at a much later point in time, we can record another episode when we can go to more.
Looking forward to.
But you mentioned the license, maybe to check that off as well. What kind of licenses does Wolt hold today and what jurisdictions?
Yes. So we're currently covering all the EEA markets, 21 or 22. Bulgaria was the last one from last week, launched a new markets. We have the full payment institution and e-money institution licenses across all these markets. Yeah, we have those licenses both from the Finnish and we have Passport. It's first the payment institution license, and we just got a bit earlier this year finalized the e-money license passporting. And the licenses are currently covering, as said, all the possible payment services and e-money services, also open banking, except for money remittance, because honestly, when we were sitting down with our legal representative, money remittance was the only service where we didn't come up with the use case that would make sense in our context. So we decided to exclude it. But for everything else, we are now kind of from licensing point of view equipped to provide also more complicated financial service.
Interesting. And you mentioned already Wolt Capital, the financing, the lending product that Wolt offers, where restaurant owners can apply for financing directly through their Wolt services. Can you maybe go a little level deeper and explain a bit like how did you start it? How did this idea started? Was it something where customers came to you and were like, banks aren't offering us any money, can you in a way give us a loan? Or what was the starting point for this product?
Yeah, I think it's a few of us. We've been approaching this topic from different point of view. So we had our back then product director, which we had discussions, and I have background also from lending business. So I think it's been in a way self-evident from the get-go that this is probably a product that's strengthened the relationship between Wolt and Wolt's merchant partners. And at the same time, because of very close relationships that our local teams have with our local merchants, it was clear that this is an area where we see great opportunities. And then to add on top of that, I would say one of the few financial services where actually it was really easy to find partners to have discussions, meaningful discussions with partners who then basically validated our thoughts and confirmed that this is a way forward. But of course, I think it all starts with the win opportunity where our merchant partners can benefit, they can grow, which then naturally benefits Wolt and also lending partner Finmid. So from the very early days, I think this was really the first product that we even started looking into seriously. And it kind of proved to be a great thing to do.
And obviously, if you said already like earlier that the fintech seed was already inside of Wolt for quite a long time, then obviously payment is maybe the most logical one to start with, not just because of PSD2, but also because of PSD2 then, of course, taking the regulated, the licensed approach. But then obviously lending is probably one that comes very soon after that. Can you explain a little bit, like maybe for listeners out there, like what do you exactly offer? Like how much money can a restaurant apply for? What kind of loan is it? Just to get some more flavor around the offering.
Basically, it's a cash advance product based on the merchant's purchase data platform. And then based on that data, it's Finmid as our partner defining the actual amounts. But we're talking about some tens of thousands of euros unsecured cash advances, as mentioned.
Do you know, like, what in the application you might also ask, like, what the purpose of a loan is? Is it then typically like kind of like working capital financing that they want to like buy more products to sell more? Or is it even, let's say, like investment in a new kitchen, a new oven for a pizza or a place or?
Yes. So it's
all of the
both,
above.
grow depending, of course, very much on the merchant. But we do see that it's used more to these one-off cases when appliances are being changed for better or premises renovated or even new venues opened, but then also based on behavior, because some of the merchants keep renewing the loan, it would then most probably act more as a working capital buffer. So it varies, but I think the bottom line there is that merchants have really found this, because one of the original reasons, of course, we know that when you put together SMB and restaurant business, it's not the most lucrative business for traditional banks. So there really is a burning need. A huge proportion of merchants go out of, or especially restaurants go out of business because of lack of financing. So in that sense, it's a strong needed product. And now the behavior and the use cases really showcase and validate. Of course, then also the results where we see that the restaurant is able to grow their business once they get the loan.
I guess like for all of us also who are not really working in the restaurant industry can probably imagine it's not the easiest industry to go to your bank and ask for a loan. But then from a Wolt Capital perspective, who would you classify as your competitors? Is it still like the banks, like for the financing specifically? Is it, if somebody wants to apply for credit from you, is it then like the competition for you in that case is a traditional bank, or is it also that restaurant? I mean, I think we have seen now in the last couple of months, not just like platforms like Wolt, but also other kind of like software providers who might also target restaurants, maybe through a bookkeeping or invoicing or other kind of like software solutions also offer loans. Are this your more competition, or is it more the banks? What do you think?
I think we might have a slightly unconventional approach to competition in this case, because if the merchant grows, we are happy. If we can help them grow with Wolt Capital, we are happy. It's ultimately I would say that it's secondary, that's where they get the financing from, if they can grow and if they can maximize their potential. It's more of a problem that many of these merchants, many of the restaurants don't get the financing, or they don't get the financing with conditions that could be like acceptable and not like totally predatory. So in that sense, there definitely can be competition, but the first problem to solve is just to arrange the financing in the first place. The landscape with these different service providers and different kind of lending solutions surfacing probably will overall help businesses to grow going forward. But other types of solutions like vertical SaaS and different business admin tools providing the lending might have slightly different kind of value proposition tailored for different kind of use cases. But I believe one of our core strengths in this context is the convenience, the revenue-based payback, which is automated. Plus, you also mentioned the restaurant business as risky and challenging business or industry in general. So the payback-based or kind of revenue-based payback also allows for flexibility in terms of the payback. So we can, because it's kind of a percentage out of the payouts, it automatically, for example, takes the seasonal fluctuations into account. So these are the unique things that we can bring as opposed to other service providers. And as we are like super enthusiastic about the customer experience, in this case, merchants being the customers, it's something that we can do in a really good manner, given the already existing close cooperation that we have with these restaurants.
Super interesting. I have 3 points here that I would like to go a little bit deeper or like share some thoughts as well. Like firstly, what you mentioned right now, obviously you are perfectly situated in the payment flow. So you provide the financing and it's not really an option for a restaurant to pay back the amount to you or not, because you are probably responsible for a good amount of the revenue for restaurants who sell on Wolt. So it probably gives you some protection as well, because there's anyway payment flowing through Wolt. So there's a repayment maybe a bit more likely. The second point is I was like a little bit smiling as well when you said that. And what it reminded me of what you said was there was I think it was an interview with the VP of Merchant Solutions of Shopify from like many years ago, before they even started with some of their financial products. And I think it was not the same wording that you used, but when you said like we don't really like care where the financing is coming from as long as the customers are growing on our platform, I think he was describing it a little bit differently, but in the same direction, saying like they didn't really want to offer the lending product. They were not really like eager to get into financing at all. But one thing they realized that it was like the one thing that held back most of their merchants to grow. So even though they didn't really like doing it, they knew if we want to grow, if we want to help our customers grow, this is the one thing we have to do, even though we're not really particularly excited about this specific product. Obviously, it might be very different at Wolt. Nonetheless, it sounded like quite similar when you said, we don't care how you grow as long as you grow. And probably if you have done the research, understanding the market, understand very well, there's not so much financing solution. Not everybody has to use Wolt Capital, but those who need it are eligible. They should have a chance to receive it and grow.
Yeah, exactly. So I think first on the risk part, the reason for why we can, together with FinMeet, provides relevant product is exactly the data. The fact that we know that this restaurant is doing well on our platform, and then when we trust that we can collect the repayments, it naturally has a direct impact into risk management. But also, from the other hand, these loans are uncollateralized. And that's exactly the reason for why we can, having their business on our platform, we can offer this kind of product. So basically, we are turning the customers, merchants' behavior and their data for their benefits through this one. And that's then referring to your second point about highlighting the growth parts, not force pushing. We have been really, I would say, conservative in a sense that we are not force pushing. We don't have to. This is available, and exactly if the customer finds a need, then we're there to help. But I think that's a broader theme with financial services. When you are a platform and the core business might be something else, it's almost a luxury to focus on providing services that support the core business of the platform. Translating this other way around, it's not being unambitious, but we can provide services that support our core business. We don't have to force push and justify and sell like crazy, because this is one piece of the puzzle that needs to work as a bigger picture.
Well, that makes a lot of sense. And actually, it connects to that very well as well. The third point I had in mind, I actually want to ask you this question, but we discussed, you answered it very well already, is one of my favorite questions for non-financial brands, platforms that launch financial services, like how do you define success for this product? And I think you mentioned very well already, which okay, perhaps nobody's, maybe it's wrong what I'm saying right now, but extremely speaking, nobody's really looking on the return of the profit the Wolt Capital product is doing itself. But what matters a lot more is the growth of the core product, because obviously a pizza baker who can now buy an additional pizza oven and sell more pizzas will obviously generate more sales on the Wolt platform, which means more commission for Wolt, which is probably a lot more important than, let's say, the loan for the pizza oven itself.
Exactly. So it's about setting relevant KPIs, understanding what really is meaningful, because of course there is a risk that we end up sub-optimizing. We end up doing something which in isolation could make sense, but again, in a bigger picture can even in the worst case go against the higher level targets. But that's also the challenging part, because then justifying something, calculating the business cases, it's rocket science, because the implications can be varied. You just can't look at what on the bottom line, because it necessarily doesn't really then tell anything about the overall success. But also, again, it depends on the nature of the service. So already comparing, for example, now the three services that we have, the merchant acquiring part and the payouts part, it's hygiene. Of course, it's a fact, it's a cost element, but we need to manage it in a certain manner. It's a no-brainer. If we can, at one point, find ways to cut those costs, shrink in the cost pool, then always the better. But it will, maybe someday it might turn into a profitable business, but it might be a bit far away. Whereas then, of course, with Wolt Capital, the dynamics also, because of risk and all that, dynamics are slightly different. And there might be ways to monetize certain services from the get-go. But then again, also like the gift cards as an example, where if you have gift cards on our platform or gift card credits, e-money on our platform, e-money in our e-wallets, the retention is probably on a different level. And so you really might want to try ways to use that money on our platform. So there are these kind of elements that we then very carefully look into when we plan for new products.
That makes a lot of sense. Maybe a closing question on the Wolt Capital. You mentioned already you partnered with Finmit. Is this product available in all the EEA countries? Maybe a little bit of details around where you stand in terms of this offering, and if you also maybe plan to expand that into other markets at one point?
So we are currently in 14 markets, and it's been an insane journey. So basically in less than a year, from one country to 14, it's been a huge achievement, especially then considering the EU local regulations. So when we're talking about lending, different countries, even though should be harmonized from directive and regulation point of view, they are not. So, let's put it this way. There are equal needs in more or less all the markets, but in some markets it's been easier to expand from regulation point of view or from technical point of view. But I think we're in an extremely good position to have this available already in so many markets. We are always hungry for more. So let's see what are then the next steps.
Interesting. And we spoke now about Wolt's activities in the world of embedded finance, mostly with payments and lending. Can you share a bit of light into what's the team who's enabling all of that? How big is the team in Wolt Payment? How is it being structured within the company?
Yeah, so regulated entities, we actually have a mini group now to enable also the growth beyond European markets, but we have 3 entities involved in the regulated financial services. And we have 15 people in this group of entities. So a relatively small number of people running this circus. But of course, it's not just us. So we have a lot of colleagues, especially in our product and engineering organization. It's tens and tens of people developing and maintaining all the services that we now provide and will provide in the future. I already mentioned our very strong local footprint, which I think gives us great advantage in the sector of financial services. So naturally, the local teams are closely involved, maintaining the merchant relationships and doing sales on these services. So from distribution point of view, and also from the feedback point of view, that's extremely important. And then other teams, finance team, legal team, or all the supporting teams. So altogether, it's hundreds of people involved in enabling our financial services provision.
That makes sense. Obviously, as a company of that size, you can benefit a lot of the, let's say, the different departments in the mothership. So the regulated institution can be rather lean. But yeah, I guess there's also a lot of technology and other things involved to make this that lean, because I would have still expected a higher number, even though knowing there's the big Wolt team behind. Impressive.
Yeah, well, it is. But of course, I have to say that it's a pleasure to work with so many smart people pulling their weight and more. Also, with the limited number of people, naturally, we need to be like laser focused and really understand what is moving the needle. So scarcity, in a sense, it also can be a good thing in that sense.
You see it as well, a lot of startups who have the frugal mindset incorporated in their DNA. This can be extremely valuable, even at times where you don't have to be frugal. Let's maybe for the last section, let's leave a little bit like Wolt behind, and let's have one or two questions about Anniina, because I'm also quite interested. You have obviously a long track record, mostly in the world of financial services. Now you mentioned Wolt a bit over 4 years, soon 5 years in this role. How was your switch, let's say, from the world of financial services, like with banks and fintech companies, to still doing the same thing, but at a completely different type of company? How was the transition, and did you exactly imagine how it turned out, or was there a surprise learning for you?
Well, actually, it's like when I joined, it felt like coming home. It's more to do with the culture, the ways of working. But Wolt is actually, it's not my first non-finance company, because I used to work at Google for a couple of years in Ireland. And actually, it's, very non-finance-like company in many ways. I don't think that it's necessarily that much about the industry, like what is different, but about the mindsets of people and the culture and the opportunism. So already with different finance companies I've worked at, there have been companies which are very slow-moving, very conservative, very risk-aversive, protectionist. And on the other hand, I've also been working in finance companies which are insanely opportunistic and fast-moving. And probably that's been one of the main learnings, that it's not about the industry, it's about how you solve problems, how you see problems. Do you see them as opportunities, or do you see them as something that is just making your lives harder? And I think it's quite obvious how we see problems at Wolt. And the same logic applies to our regulated activities. So if we can identify a problem, actually, the harder, the more complicated the actual solution to resolve the problem is, probably with the bigger advantage and opportunity it comes with. So taking the problems as something that we can benefit from is a great mindset. And that's really the opportunism in the everyday business. Also the can-do attitude, because the harder things you do, the less limitations you feel, because you can trust the people and throw like crazier and crazier things at them. And it's a really great experience to be involved. But as said, it requires a lot of smart people around. Otherwise, it doesn't work out.
Interesting perspective that the switch from financial services to non-financial services isn't maybe that big. It's more about the mindset and the DNA of the companies, maybe also the risk appetite behind that. Then maybe final or closing question in a way, if there is anybody, let's say there's a person out there who is being given a similar role that what you had like 4 or 5 years ago, building up financial services for, or maybe not a platform, but like any kind of like business which is not really from financial services. Is there a piece of advice or a learning you would want to share with that person?
Yeah, if you have already identified that there might be an opportunity to do things better in-house, then just go for it. Because probably what you need to start with, and I think that's how Wolt already started, get a few people in-house that probably know what they're doing to set it up. In this kind of journey, the point where you actually don't know anymore what to do comes quite fast, but getting the basics right, it makes the future expansion and future complications much more easier to handle. But I would definitely recommend that. There have been a few Finnish companies who have been considering. I've been in discussions with them, and I've always said that, hey, go for it, especially if you're running international business. In Europe, especially, we're still in a state where finding the partners, managing multiple partnerships probably takes equal much of time and effort, or even more. And then the knowledge is with your partners instead of keeping the control and owning the development roadmap in-house. Of course, it comes with strings attached. We haven't talked about really the hardcore compliance, anti-money laundering, and financial crime prevention and all that, which is actually the area which probably takes most of our team's time to get things in the place. So you need to be prepared for that. But it's not insanely hard. If you have identified the opportunity, if you see the demand, go for it. Because the more we have businesses, like where embedded finance is baked into the business, the easier the landscape will be to navigate for everybody, and the better services ultimately we can offer to customers, whoever they in the setup are.
Anniina, I couldn't have said a better closing word for the episode. So thank you so much for this. Thank you, of course, also for all the insights you shared. If there's a listener out there who wants to maybe learn a bit more about Wolt Payments Capital, or maybe wants to speak to you, what's a good way to get in touch with you or your team?
Well, probably LinkedIn is the best way. So please reach out, LinkedIn, Anniina Heinonen, and then we will take it from there.
I'll make sure to put the link also in the show notes. Thanks again, Anniina. And yeah, looking forward to see what you and your team are working on next. We'll make sure to follow that. Thank you.
Perfect. Many thanks, Lars.
Thanks for listening. As you might know, I'm always looking for insightful embedded finance stories, especially from non-financial brands. Do you know a company or person I should interview? Please let me know. Until next time.